I want to welcome Mark Diorio, who's the Chief Investment Officer of Brookstone Capital Management. Mark, how are you?
Great. Thanks, Chris. Happy to be here.
So I am really excited that you're going to be able to help us to sort of do a deeper dive exploration into something called structured notes. But for a lot of people in the audience out there that might think about getting on this call next week, can you give us a high-level overview of what the philosophy is of a core and B, a satellite, and how structured notes might be one of the satellites that should be considered for an investment philosophy for people that are thinking of exploring other alternatives to traditional investments?
Sure. So our core and satellite approach is what we call our overall portfolio allocation framework. And the idea is that you identify a risk-appropriate core investment portfolio. And then around that, you can customize that core portfolio with different satellite tilts. And satellites to us are not different asset classes, but really derived and targeted towards different outcomes. So maybe you're a moderate investor, so you have a moderate core portfolio, but you want a little bit more growth. And so you can add a growth-based satellite or investment, so in an ETF or a mutual fund or another investment or a structured note that we'll touch on. Alternatively, you could be a moderate investor but want a little bit more income out of that portfolio. So in your satellite allocation, you add this around your core portfolio, you add some more income investment vehicles. And so the typical rule of thumb is about 80% core, 20% satellite. That's just a rule of thumb. It's not a rule. It's just an idea of how to position and the idea behind it. And on the income side, one of the areas that's been very popular is something called structured notes and an income-based note. So you have a couple of options on the income side. One, you can use dividend-paying stocks, for example. Another, you could use traditional bonds. But one of the things with traditional bonds is they're paying very low and even ultra-low interest rates going forward. In fact, in many levels, it's below the rate of inflation today. But a structured note is really a unique vehicle that is issued by the major banks, so think major money center banks, and issued from their capital markets desks out to financial professionals. And so an average yield on these notes is about 8.5%. for a one-year term. And there's a few more details behind that, and there's really just a few key areas that you need to know on these notes are: 1, who the issuer is; 2, the term; 3, what the payment terms are, what the coupon or interest rate is; and then 4, what the principal risk is. So it's really a unique vehicle. It's different than just straight fixed income or equity. It's called a structured note.
Well, Mark, thank you very much for that insight. I'm really excited for next week. It'll be content that you don't want to miss. So thanks again.